How to buy growth ETFs? Buying growth ETFs, exchange-traded funds, is a straightforward process. Growth ETFs invest in companies with high potential for above-average earnings or revenue growth, often in sectors like technology, healthcare, or consumer discretionary, and they aim for capital appreciation rather than dividends or stable income. Start by researching options such as Vanguard Growth ETF, VUG, iShares Russell 1000 Growth ETF, IWF, or Invesco QQQ Trust, QQQ, analyzing factors like historical performance, expense ratios, sector allocations, and top holdings. Compare metrics like expense ratio, lower is better, assets under management. Larger funds are typically more liquid, and volatility based on your risk tolerance. Choose a brokerage like Robinhood, Fidelity, Charles Schwab, TD Ameritrade, or E-Trade, focusing on features such as low fees, user-friendly interfaces, and research tools. Open a brokerage account by providing personal information, selecting the account type, e.g., taxable account or IRA, and funding it via bank transfer or other methods. Once the account is set up, search for the ETF by its ticker symbol, e.g., VUG, QQQ, choose an order type, market or limit order, specify the quantity, and complete the purchase. After buying, monitor performance using brokerage tools or external apps, and periodically rebalance your portfolio to ensure it aligns with your goals and risk tolerance. For beginners, it's wise to start small, diversify across multiple ETFs or asset classes, and consider dollar-cost averaging to mitigate the effects of market volatility.